Welcome to the Entrepreneur Academy with your hosts, Nick Dutton of Engage Finance and James Cross from Crossover Property. On this episode of the Entrepreneur Academy,
they're managing to be supported by some government grants and the fact they've helped with furloughing their staff. That's really just a sticking plaster. And 2008, what they did then with quantitative easing was a sticking plaster. Now like a house with the whole building's held up by sticking plasters.
But now, here are your hosts, Nick and James.
Hi everyone, welcome to another episode of the Entrepreneur Academy, and we're on Zoom again, down with the technology, and we're joined again by Victoria Jones. Thank you for joining us once more.
Oh, you're welcome.
So
thanks for having me.
It's just me today. Jim's not feeling too good, so I just thought now would be a good time to catch up on. Now I've read the book, which first of all I'll say was awesome. Genuinely couldn't put it down all day, so. It's really worth getting, and I think for those that I've spoken to, they're a bit worried that they don't really understand it, and I didn't before. So, but I'd still say that it's well worth the read. There's a mixture of both points where, even if you're not really financially astute, you can still understand it. But then it really went into detail where you think, okay, now I need to know a bit more. It went into that extra detail, so it was really good. Really
good. Great, excellent. It's hard to pitch these things. Yeah, it's hard to pitch these things. When I first got into Bitcoin, one of the things I found was that you're like, where do I start? And you go onto YouTube and you see lots of people talking about it, but they're all at a very high level, and it's just like, I don't know where to start with this, and it does take time to dig into it. So it does. I felt that it was, there needs to be a way to kind of introduce it in a way that it relates to people. So
I think that's the thing. That was what made it relatable, because actually the examples you used, you could sort of go, oh, okay, yeah, that makes sense. Whereas like the stuff, again, I've read on YouTube, it's more looking at the graphs, it's looking at how to read that, when to catch it at the right point, but it doesn't put it into perspective as to why you would want to invest in it or why you'd want to use it. And that's where it really hit home, because even talking to people around me now about it, they're like, oh yeah, Bitcoin, yeah, it's just dodgy, you don't want to get involved with that. And I'm like, please read the book and it will open your eyes, I promise you.
What would you say were your major insights as a result of reading it?
Mainly the financial market the way it is now. I obviously understood that money wasn't necessarily based on a gold standard and it was leveraged a lot higher, but it didn't really sink into account when you're looking at the amount of trillions of pounds in debt. And one thing I did like is that you put on about searching a YouTube video about how trillion relates to it. Yeah. And I watched one and it's literally like, oh, wow, okay. And that's when you start to realize that actually it is a ticking time bomb and it could go off any second. And I do worry. The reason I sort of now so passionate about it is, similar to you, is that more so now, the way the market is now, you can almost see that bomb is really coming to the forefront and it could go off any day.
Yeah, and it's remarkable, isn't it? We've had 10 years of austerity where the government couldn't spend any money, and now, of course, we've got this crisis, and it's money for everybody. I know, and it's just like, okay, who's paying for this, guys?
Exactly.
But when you realise how money really works, you go, oh, they have no problem with this.
Yeah.
They've delayed the inevitable for 10 years. They know it's coming down the track. It's just like, okay, we'll deal with this emergency and then we'll deal with that emergency later.
It's what I wanted to sort of break down in the sort of areas I wanted to discuss was obviously Bitcoin, the financial market as it is now, and potentially a bit controversial around the NHS and the way that's going as well, because I feel like before when we were talking about it, people can't necessarily relate to it because they're not really seeing it, but now you can really, it's there, it's black and white, it's there in front of you. I feel like they really hit home a lot more. So something that I've sort of split Bitcoin into is accepting it from a business point of view as a source of funds, but also from an investing point of view. I see a lot now that a lot more people, because they've got the time, are learning about share investing, learning about investing completely because it's a good time to be doing it because everything's just dropped off a cliff, but also, they've got the time to learn about it, and property seems to become a bit stagnant. The other investment platforms are becoming a bit stagnant. So I'd like to include Bitcoin within a portfolio of investments, and I'm wondering, picking your brain, about whether now is the time to be doing so. Obviously, in the book, you mentioned about halving, and I think that's coming up also. What impact that has on the value of coins and the market demand. What I've been reading is that halving is likely to increase the price, is what you've mentioned as well. But other people have said that where it shows a spike in the price is not always correlated with halving. Sometimes it's just the demand has gone up at that time of year anyway. So I don't know what your views on that were.
Let me start by explaining what a halving is. Basically, the way in which Bitcoin is a software program, and the reason why it's valuable is because it's been set up in such a way that it's designed in a number of the best economic properties, as if it was operating on a gold standard. So it used to be the case that people would use gold and silver coins for transactions. And actually the most prosperous time that we had in history was when most of Europe was on a gold standard at the end of the 19th century. Yeah. But of course, with the two world wars, because the wars were so expensive, they had to find a way to fund those. So that was where our current fiat money began. But of course, the problem with, and this is where we currently stand with the problems in the financial system. Now, a lot of people say the problems with the existing financial system, basically this ever-increasing debt, can only be solved by going back onto a gold standard. But of course, no one's going to do that until they absolutely have to. Yeah. But in reality, going back to using gold and silver coins, that's 19th century technology. Yeah. And one of the reasons why we ended up on a fiat money standard in the first place is because people had to use pieces of paper to represent the amount of gold that they were exchanging because it was too heavy to carry it around. Yeah. So it was inevitable that if we ever went back to anything like a gold standard, it had to be a better solution. And that is the way that Bitcoin has been designed, but it's very controversial. A lot of people who aren't familiar with finance aren't familiar with the fact that there are different schools of thought in terms of how finance should work. So at the moment, you've got the group that gather around the Keynesians that say, we can create as much money as we like, we just need to manage where it goes. Yeah. But then you have the Austrians that say, whenever you do that, you're going to get perverse incentives. Having something like a sound money keeps everything fairer and allows it to operate without assigning moral value to that money. The money is the money, and it does its own job without, trying to manage it.
It's not linked to human thoughts, I guess, as well.
Exactly. You're not. Keynesianism is very much involved with manipulation and very much involved with where people think that value should be assigned and distributed. And the problem with that is who makes the decision. I don't know any leader in history that's never made a mistake, or who hasn't caused a problem, and so there are huge issues with that. And if you do a deep dive into how the financial system is working, you see all sorts of corruption and mismanagement going on. And of course, this is why governments get bigger and bigger, because you need more and more people arguing over how the money should be spent. Whereas, if you just let the money be the money, it could do its job, and we could sack the rest of them, because individuals want to make their own decisions. They don't want those decisions being made for them, and so you need a tool that's kind of independent of that. So these are some of the philosophical arguments behind a gold standard, and so Bitcoin was very much created with that in mind. So the idea behind gold is it has value because it's rare. You require a lot of energy in order to get it out of the ground. And so with Bitcoin, it's been designed in the same way. The only way you can create more Bitcoin is by having it mined. And basically what the miners do is they search for a very rare number that validates each block of transactions on the network. And it's quite complicated. You need to spend some time researching it. And obviously I don't want to spend this whole podcast, explaining that. But basically it's this feature of mining that helps to validate the block of transactions. Wow. And the fact that this rare number needs to be discovered in order to validate those block of transactions is where the rarity comes in Bitcoin. And because of the way, and it's been the rules have been designed into a software program, and the software program has been set up so that only 21 million Bitcoins will ever be created. So this is where Bitcoin gets its rarity from. So
gold, I assume.
Exactly, except actually there's a lot more gold on the planet than a lot of people recognize. Even gold isn't finite, but it does require investment in order to get it out of the ground, which is why it can be somewhere where you store your savings. Whereas if you try and store your savings with something that someone else can print, there's nothing independent establishing that value. So this is, the idea behind Bitcoin. It's kind of digital scarcity. It's the first time ever that it was possible for that to be invented. And there have been a lot of people, and this blockchain technology is what a lot of people have decided to run with because they think that idea is valuable. They don't, unless you've got an understanding of how money really works, you don't understand why Bitcoin is valuable.
Yeah.
Now, blockchain is a whole other debate, and there are plenty of people who are still arguing whether or not, Bitcoin has any value outside of it just being a form of money. But right now, the quality of our money is actually a huge problem once you understand it. But most people don't even understand that that's the problem. So it's really difficult to understand why Bitcoin is the solution unless you've already come to an understanding of what the problems are that need solving. So going back to the halving, what happens with the halving? The software protocol is set up in such a way that when a miner validates a block of transactions, they get a certain reward. The reward they get is a number of Bitcoins, and this is how Bitcoins are created. Bitcoins are only released from the network when a block of transactions are validated. And so what happens is that reward halves every 4 years. Okay. So for the last 4 years, the reward the miners have received for validating a block of transactions is 12.5 Bitcoins.
Yeah, I was going to say.
So the thing is, with Bitcoin, because a lot of people are now seeing it as a form of sound money, a lot of people are saving them because they realize that this is the ultimate form of savings. And so if people are kind of holding them, every time new Bitcoins are created and come onto the market and they're holding them and they're not actually using them in the real economy, the only way you can get access to new Bitcoins is if someone sells them or if they're created.
Yeah, okay.
So at the moment, the only way in which they're being created is by the miners, and they're getting 12.5 Bitcoins every time they validate a block of transactions. Now, in order to validate this block of transactions, they have expenses. They have to fund mining rigs, which is expensive in terms of electricity. So there's a fine balance there. The value of one Bitcoin has to be at a certain level in order to cover their expenses. Once it starts dropping below a certain level,
it's not worth it.
Their business model starts to suffer. So this is what tends to push up the price. When there's a halving, which I think is in another 13 or 14 days, it's very soon now. But it doesn't happen at a particular point on the calendar. It happens once every, I think it's every 100,000 blocks are validated, the reward halves. And so that's coming up very rapidly. At the moment, it's estimated it's going to happen in the next 13 to 14 days.
Right.
So when that happens, the reward will go down to 6.25 Bitcoins. So what that means is the money that the miners were previously getting from validating one block of transactions was the value of 12.5 Bitcoins, which at the moment, I think the value is about $7,500 at the moment. So times that by 12, that's probably what the miners are spending on electricity in order to validate those transactions.
Wow.
Now, if the reward they get suddenly decreases by half, their revenue needs to double in order to cover their expenses. So what tends to happen in the run up to the halving is rather than sell the Bitcoins into the market, the miners tend to hoard them because they know the halving's coming up and they're still going to have to pay their expenses. So they'll kind of hold them back. And then what happens is once the halving happens is a lot of miners tend to sell them because they're getting a smaller amount of reward, but they still need to pay their expenses. So they're using those Bitcoins that they're saved in order to do that. So you kind of have this supply and demand dynamic going on that tends to increase the price.
Okay.
But it doesn't increase the price straight away. If you look back in history, there have been 2 previous halvings. What tends to happen is there tends to be a big leap just prior to the halving in terms of the price, and then just after the halving there tends to be a bit of a drop, but after that it gradually tends to go up and up, because of this dynamic. And so the curves are kind of getting wider and wider as time goes by, and of course Bitcoin becomes more valuable and there's more available that people are buying and selling. But what we tend to find is that after the halving, for about 18 months, there's a kind of gradual climb in the price. And as that's happened over a period of months and people get more and more used to it, word gets around, it just like, know how much money I've made out of Bitcoin. And then, towards the towards the end of 18 months, there's this kind of crescendo because everyone's heard about it. So the price tends to spike, and that's the point at which everyone's buying. And then some clever so-and-so that bought them 6 years earlier, that's the point at which they sell. And it kind of crashes the price for the next 3 years before the whole cycle starts again. So that tends to be the dynamic. It's set up in such a way that in terms of dollar value, the value is almost guaranteed to increase. But of course, this depends on a lot of things. It depends on, how much value people are still putting into the network. If something happened to destroy Bitcoin's reputation tomorrow and everyone decides to sell, that would be it. It would crash to zero. But the thing is, the longer it goes on and the more people understand the fundamentals behind it, the more people are incentivized to hold on to it. And of course, the problems in the financial system, support that belief as well. And so it becomes the virtuous circle. And so, since its inception, I think it's been the best performing asset of certainly this century.
Absolutely, yeah.
There's been nothing else like it.
Yeah.
And this is why, it's someone, whoever invented it, and they supposedly call Satoshi Nakamoto, but no one still knows who they are. But whoever invented it really understood economics. They understood computer science. They understood human psychology. They were very, very clever. As a result, it's almost like the benefits were programmed in right from the beginning. And there were lots of problems at the beginning. It's not been perfect. A lot of people have worked to kind of solve the problem. But the thing is, as they've worked on solving those problems, and more people have been motivated. Because, of course, a lot of people have been seeing the problems in the financial system and looking around and kind of going, okay, I see the problem, where do I go for a solution? And I did that, because I was running my own business, and it was as a result of running my own business that I started to look into how the financial system worked. And you look around and you kind of go, okay, I don't get it. And it's just like, well, if I want to save some money and the bank's only giving me 0.01% interest, where's a better place to put my money? And then you start learning about what money actually is. I mean, a lot of people will go to the stock market because it seems and if you go and see a financial advisor, they'll recommend the stock market. But actually, when you understand that the reason the stock market is going up is only because the money is bad, you realise that's probably not the best. Not the best place to put your money.
It's true. That is true.
So that helped me understand what gold and silver was. But as a result of having been a business owner, I was just like, as a business owner, I don't want to be collecting gold and silver coins in my business. It's heavy. It's a huge chore to take it to the bank. How do I check whether or not it's because there's stories of you getting gold bars with tungsten covered gold leaf bars. So you've got all those sorts of issues when you get into sound money, but the concept is sound. And you can see throughout history that it's when societies were based on a form of sound money, then they prospered the most because there was no one interfering. So the fact that someone's come up with a digital solution, frankly, I just think is brilliant. And the fact that people don't get it really boggles my mind. But then again, I've spent time studying it. And because I spent time studying it, and, I'd meet up with my friends and I'd start explaining it to them. It's just like, I don't get to see you very often. I really don't want to spend 3 hours talking to you about this. But if I write a book, next time I can tell you just to read this, and then we can talk about something else.
Absolutely, yeah.
If you're really interested.
I think that's the problem, isn't it? Because the problem is, from where I see, is the government don't really like it, and it's them that sort of control the media, and that's what people are seeing. and they only see the bad press, and they automatically just think, no, that it's not for me.
But it completely destroys them. I mean, the thing is, you need the government to manage the money as it is. If you create something that doesn't need any of that, they will all lose their jobs. Yeah. So it's hardly surprising, And the thing is, the government supports the media. I mean, the BBC is. Government funded, and of course there are huge moral hazards with that as well, because of course whoever's funding does influence people. It does influence people. You can't get around that. So it's really, really important for all of our society that the money is independent of other people's ideas about it. And I wouldn't say Bitcoin is totally immune from that. There are certainly some dangers in getting involved in the blockchain. And I think it's really, really important as people are developing their education about the financial system, about how money really works, and the fact that this is a potential solution. Be mindful of what the dangers are of this as well. And it's already starting. It's like, no, we don't need Bitcoin, but this blockchain thing is a good idea. It's just like, that is actually the last thing we want.
Well, the way I'm seeing it with from an investing point of view, and I see it as there's three ways really that for a Joe Blogs person that thinks, okay, I'm going to get into this. Obviously, one is mining, which I think for a standard person who doesn't understand it is just not the right avenue to be going down.
In the early days it was, but not now.
No. It's when I was reading about it, even for me, it was just like, whoa, okay, this is next level. The other two are sort of sit and hold, which I think would probably be the most popular strategy. But there's also more of like a spread bet strategy where you buy and sell on a day trading, that sort of thing. So, I think the two are the day trading and the sit and hold. Which strategy for newbies, or which ones have you sort of followed?
Well, I mean, I think the trading idea sounds appealing, but what you have to realize is now that Bitcoin is more established, there are a lot of professionals in the market. And so you really need to know what you're doing if you're going to be successful with that. And also the other thing is, with having talked about Bitcoin's price trajectory in the past, up until 2017, it had been allowed to kind of develop on its own with no interference. But in December 2017, they introduced futures contracts for Bitcoin, which now interferes with its price cycles. People can bet on the traditional markets on whether Bitcoin's price goes down or not. And it's these sorts of mechanisms that have been able to keep the price of Bitcoin and gold and silver artificially low for a number of years. So if you look at a chart of Bitcoin and look at its history, you look back and you can see how the dynamics have worked in the past, and you kind of think, oh, okay, I get it. I see how this works. But that doesn't mean it's necessarily going to work like that in the future. And of course, on this occasion, with this halving, we've also got the problem of this pandemic. The economy is literally grinding to a halt. The people who've saved Bitcoin in the past may actually be having to sell them just to pay their living expenses, especially if it's the only form of savings that they have. And so, there's no guarantee that it's going to follow the same kind of path as it has in the past. It's worth being aware of the underlying dynamics, but you don't know for sure. So a lot of people who are trading will kind of like look at charting patterns similar to how they look at the stock market. But again, the stock market is heavily managed. They've had the plunge protection team for God knows how long to make sure that there's never a dramatic plunge, because it just affects so many things. So although there are some people who are able to scrape pennies from the market due to the little up and down motions, you are ultimately betting, because again, it's something that doesn't operate organically. There's too many people pulling and pushing the levers behind the scenes. It's really hard for the average person to get ahead. So I think that's what I would say about the trading aspect. I think for someone who isn't a trader, just a normal person, because I'm not a trader. My profession is as a dentist, and just learning about dentistry and being involved in dentistry is literally 24/7 focus of attention. I've not really had I never had time in my career to look into any of that.
No.
Might have been more profitable if I had, but it does create. It is very time consuming, so you can't really do that.
No.
As a professional, I know a lot of my colleagues, a lot of my friends will have financial advisors, and they will hire a financial advisor in order to in order to have some professional help in kind of getting ahead financially. But of course, the financial advisors are all regulated, so they're only able to, I mean, you'll know this, Nick, because you are one, but they're only able to advise on the products that are approved. So, anything that kind of goes outside of that boundary can be very tricky. Doesn't mean you can't, but you almost take your life in your hands if you do, because if someone can kill your career for making that kind of decision, and people do, it's much more risky. It's much more scary. But the thing is, when you realize the bigger problems that are on the horizon, it's like, a lot of my colleagues, they had no idea that something like this pandemic could happen.
No, exactly.
They run really capital intensive businesses that are often, just on the edge of profitable in order to keep them going. And they've been able to run that model for the last 10 years very successfully. And all of a sudden something happens that forces them to close for 6 weeks. Most of them don't have cash reserves for that kind of emergency. But it's the same kind of thing with the financial system. You can go along thinking everything's fine because this is the way it's always worked, so it's always going to work the way it always has, and then out of the blue something that can happen that changes everything. So you have to have a perspective of the bigger picture to realize quite how vulnerable you are, and most people have no idea. Most businesses don't have any idea either.
But also going back to that is because Bitcoin it sort of dived when this virus hit as well, didn't it? Which I wasn't expecting because of the way it is. I didn't think it would be as affected as the normal sort of stock market, but it did seem to. I think it dropped from the highs of about 10,000, wasn't it? And it dropped to about 3.5, almost within overnight, almost. So.
Well, this is the problem because it's not operating organically anymore. Because it's tied to things like futures markets. That people will see the price of Bitcoin run in tandem with the stock market more and more. So going back to your original question about trading or holding, I think the ultimate strategy is to get a little bit and just hold it. Because the thing is, something like the pandemic that affected the dentists is going to be like the pandemic that affects the financial system. And it's like overnight, things will change like that. For the last few years, I've been following like the gold and silver investors who've been going, buy gold, buy silver, buy gold, buy silver. And it's just kind of, fine. When the time comes, I'll start investing then. But it's just like, this pandemic happens so quickly. No one had a chance to think. And if you watch the gold and silver investors, anyone who's trying to buy gold and silver now, it's like 100% premium on what you could get it for 6 months ago.
Absolutely.
And so Bitcoin will kind of be the same thing. It's not the same at the moment because we've got the internet, and so it's still fairly easy to access it, unlike gold and silver, because you need physical delivery of that. But while everything's still functioning in the financial system, it may well be that Bitcoin's price is suppressed and it follows along the lines of the existing stock market. But at some point, literally overnight, everything could change. And you'll be so glad you had some.
No, I agree. I think that's the problem, isn't it? Because, ETF platforms and CFD, like trading 2-on-2, plus 500, all these sort of standard platforms that a lot of people use, you can now get involved with Bitcoin on it. And I think that's the problem, because savvy traders that understand the stock market, who might diversify their portfolio into that as well, saw everything crashing overnight, sold theirs, and then it just dropped with everything else. So I think, like you said, that is affecting it because there's more of a human involvement towards it compared to what it used to be.
And also with the ETFs, you're dealing with a paper contract. You're dealing with something that's a promise to deliver. Whereas with Bitcoin, if you've got a Bitcoin ETF, they're promising to deliver the Bitcoin, but actually similar to it's always going to be harder to ask to take delivery of your gold because you have nowhere to store it. If you're very wealthy and all of your wealth is in gold, you need to pay someone to store that safely.
Absolutely, yeah.
With Bitcoin, the average person can have a tiny little device and just withdraw it from an exchange and hold it straight away. And the thing is, the more that people do that, the less there is to actually buy and sell on the actual market. So it may well be that people are buying and selling these contracts, but as with so many things, how do you know that they're actually trading the actual amount of things? Because, on some of these Bitcoin exchanges, some of the other tokens, for example, so Litecoin is the example of another cryptocurrency that's limited in supply. There's only 84 million. You can have the entire market, you can have the entire market of Litecoin traded in a single day. Whereas, I know for myself, I've got a few of those that I'm holding that aren't on the market. So, what are they doing? They weren't buying and selling mine. So the thing is, they will get away with it for as long as they're able to get away with it. But, as things start to break in the financial markets, so already we've seen in the last couple of weeks, oil dropping significantly low. And of course, the dollar, it's known as the petrodollar because it's very closely, has been very closely tied to the price of oil. It's not my area of expertise, but, what I remember hearing someone a while ago saying the moment oil goes below $35, all of these derivative markets start to implode. It's just like, what happens when it goes to minus $35? So, goodness knows what they're dealing with in the back rooms, but we haven't seen the effect of it yet. But in terms of the maths and how it's supposed to work, it's now totally dysfunctional. And it's almost like we haven't really seen the outcome of it yet. A lot of these small businesses, they're chugging along, they're managing to be supported by some government grants and the fact they've helped with furloughing their staff. But that's really just a sticking plaster. And 2008, what they did then with quantitative easing was a sticking plaster. Then, it's like now like a house with like the whole building's held up by sticking plasters. And you're just waiting for the moment for the whole thing to go.
When you look at it, it's scary, isn't it, really?
Most people have no idea.
And I think that's the bad point, because we're relying on people that are probably the ones causing it when you think about it. So and then when you talk about holding it, you mentioned go into a bit of detail about the devices, because that was new to me. That's not something I understood, but I get, obviously, once you've got gold, you store it in a safe. So Bitcoin is the gold, and you need a safe to store it, but obviously it's more of a electronic storage device.
So when you buy Bitcoin, you can buy it on an exchange, which is similar to going into a bank, and you can hold it on an exchange as well. So it's like having it in your bank account. So something like Coinbase would be a good example. That's where I started. It's a really easy place to, buy and sell some Bitcoin, and especially for anyone who's in England, it's linked to England, so you can do direct transfers from your bank account. So that's a great place to start. But the trouble is, it's like holding your savings in a bank. If anything happens to that bank, it can go, your savings can go with it, depending on, the legal rules around it. So what tends to happen is you want an asset that you can hold in your own possession. So you need to be able to withdraw it from the bank and keep it in your safe at home. The equivalent of a safe at home is what's called a hardware wallet. So that's a small device that can be connected to your computer, but it is held separately from the computer, and your digital assets can actually be stored there safely, so that only the person who knows the private key, which is hopefully you, the owner, would be able to have access to them.
So I see it's almost like it is a bit of an external hard drive, isn't it, really? That you store your coins on.
But it's designed in such a way that, I found it fairly straightforward to figure it out, but then again, I'm qualified to master's level, but it's designed to be relatively straightforward. It's probably still requires a bit of research for the average person, but with a bit of effort, it's fairly straightforward to figure it out. So, if you're unsure, I wouldn't recommend putting your life savings in it. The best thing to do is just experiment with a little bit. Again, that's what I did when I first bought it. It's like £10 here, £10 there.
Yeah.
And I experimented with using it to buy for a few things. So I was doing that in 2016. And so it'd go up a little bit and like, oh, what can I spend with what I want?
Yeah.
And that's, just play with it for a while, and the equivalent of 2016 is what we're about to go into. So you've got plenty of time. I don't think it's unlikely that there's going to be any dramatic moves this year. So it's a good time to have a play. I could be wrong. Don't hold me to it. But it's a good time to have a play with just a small amount, just experiment with buying a little bit on something like Coinbase, get a hardware wallet, although hardware wallets are quite expensive. It's always about $99, but it's cheaper than a safe. It's cheaper than hiring a bank to save your gold. But I think, if you get to a stage where you're saving over £1,000, you've got over £1,000 on Coinbase or something, you want somewhere safer to save.
I was going to say,
And that
point, it's not worthwhile, is it?
Exactly. If it's £100, just leave it on Coinbase and play with it.
Yeah.
I mean, Coinbase is still one of the most reputable platforms in the space. But eventually, when you get more comfortable with it, you'll want a hardware wallet to store it on.
I mean, I looked on Coinbase yesterday following the conversation we had, and it's just as simple as all the other platforms, really, to use links to your debit card, and you do it from there. One thing that I will say that other people have mentioned is you don't have to buy obviously a whole Bitcoin. When you look at it, it's like, whoa, it's £7,000 to buy this one, and it's not that. You can buy sort of parts of it, can't you? Satoshi.
Yes. So it's important to acknowledge that one Bitcoin is 100 million Satoshis.
Yes.
So it's just that when we first started, because there are 21 million of them, it was just easier to talk about Bitcoins rather than 3 quadrillion, Satoshis or whatever it was.
Yeah.
But so, yes, it's possible to buy it £10 at a time. And of course, if you spend £10, you're getting 1,000 Satoshis, and who knows what 1,000 Satoshis might be worth in the future. Absolutely. So, even a small investment is worth exploring and playing with until you learn more about it.
I hope that gives obviously people a bit more insight as to how to sort of invest and how to use it. Obviously, the financial market now is very turbulent and volatile. Do you see this sort of being the last straw? I know obviously talked about the ticking time bomb and that sort of thing. To me, it almost looks like it could be the last straw before it all goes kaboom, really, when you look at the number of debt.
Yeah. I mean, to be fair, a lot of people thought 2008 was. A lot of people are amazed that they managed to keep it going after 2008, and no one had heard of quantitative easing before 2008. So goodness knows what they've got in their hat. So before this crisis hit, a lot of people were talking about modern monetary theory, which is like helicopter money. So it's another way of the Keynesians kind of figuring out how to pull and push these levers in order to make sure the money gets to where it needs to go. And so the idea of modern monetary theory and helicopter money is basically kind of giving money out to the people. And essentially that's what they're doing right now. The pandemic has been the perfect excuse. It's just like almost anyone who's anyone can get something from the government right now, which is unbelievable, really, when you think about how the financial system is really working, and especially the pain they made us go through for the sake of austerity. Because, of course, the idea behind austerity was that we were going to start paying back some of this money that had been spent as a result of bailing out the banks with the financial crisis. But no, 10 years on, we tried that. Everyone's suffering too. Everyone's screaming. They all want Brexit now, and, they all want to vote for the Conservatives. We clearly need another strategy. And so now it's like open the floodgates, and there are loads of memes at the moment for people who know what's going on. It's like money printer go it's just like it's almost like they can't print it quick enough. So going to the point of your own game, we could be very close, but who knows what they've got in the back of their pockets. But again, second guessing what the powers that be or powers that soon were are going to be is a very, very difficult thing to do. I think, if you understand the fundamentals, what you realize is that you need to invest in hard assets. Now is the time for hard assets, because although we're probably going through a phase of severe deflation, with a current severe economic recession, in all of the efforts that the government go to and the central banks go to in order to stave that off, by printing all of this money, they're essentially devaluing the currency. And so at some point, hyperinflation will kick in. Now, a lot of the central banks, they, even prior to this, was starting to talk about, we need some kind of digital currency. It's so funny, they dismiss Bitcoin, but they need their own digital currency. But actually, that's even worse because anyone who's into privacy and self-sovereignty realizes that the moment that you have everything digitized so that you can follow people's transactions and monitor them and analyze the data, you're getting into some really scary territory there. So actually the governments having their own kind of digital currency is probably the worst thing, the worst place we could go. But the problem is if you focus too much on that, you miss what Bitcoin is. Bitcoin is kind of the same thing, but because it's decentralized, it eliminates some of the dangers. It might not eliminate all the dangers, but if we're going to go down that path anyway, you want to be on that path, not on the non-Bitcoin path. And it's a very fine distinction. And that was another reason why I wrote the book, because I was like, most people don't even get Bitcoin. They don't understand the financial system. And so what's going to happen is there's going to come a day when there's a huge crisis and the government says, here you go, this is how we're going to save the problem. And this is our solution. Isn't it great? And at the same time, you get all this money for welfare, all this money for the NHS. We've solved the problem. Aren't we brilliant? You don't want to look at that Bitcoin stuff and you just kind of think, oh my God, this is a disaster waiting to happen. It's just like people really, really need to know and understand what the difference is, because otherwise they're going to be presented with a fait accompli and not realize the trap that they're being led into, which I think is frightening. So that for me, that was my personal motivation to kind of write this and start talking about it, because I was like, people really need to understand it, because you can see it coming. I've seen Mark Carney talk about a digital currency. They're in such deep doo-doo. They're going to have to come up with a solution at some point. And people are so brainwashed by what the government have told them. I can see them blindly accepting it. And the thing is, once you've got the majority accepting it and peer pressuring everyone else into it, it's like, well, it's really good because it helps the NHS and it helps the poor people. And it's just like, oh my God.
But in essence, it's taken some elements of Bitcoin, but it gives them full control over it, doesn't it, really?
Exactly. So you're talking about the difference between a centralized currency and a decentralized currency. Because of the way in which Bitcoin has been designed, it's decentralized. So it's been designed to be this independent form of money. It's not impossible to change the software, but it's very difficult. It requires a consensus of opinion in order to do it, and it has to be done very transparently. Whereas, if you've got a central entity who's gone, this is how the digital pound is going to work. You're just like, I'm sorry, but you've completely messed up the pound as it is. I don't want a digital version. Thank you very much.
No. That's it,
But it's a really complicated thing to get. So, yeah.
And that sort of leads on to, obviously, the NHS and the way that is now is, in the book you've touched on, obviously it being a monopoly, which even more so now is hitting home. And also you've talked about those that enter, even obviously you wrote this before this even happened, and those that are in the NHS didn't expect that, lack of equipment would become a thing, but actually even now you're hearing about it. And I can imagine that's even just the tip of the iceberg compared to, PPE, compared to what actually they're lacking. It's sort of interesting that you've talked about that, and now it's happening. You can sort of relate to it and put two and two together.
Yeah. It's really scary. And the thing is, the only thing you hear about something like the NHS is on the media, unless you've actually worked in it. And even people who've worked in it and have blown the whistle, they're then asked to sign non-disclosure agreements. So they'll get a payoff in order to not talk about it.
Yeah.
So, and the thing is, the bigger it gets and the more controlled it gets, the more vulnerable you are if you talk about the problems. So, a long time ago, I think I qualified in 1997, and very early on, even before 1997, again, the story I mentioned in my book, I became very disillusioned with the NHS and how decisions were made and how draconian it can potentially be, and until recently, I think, even in the 80s, it was like doctor knows best, and it's almost like, you had to do what the doctor says. Now, only recently, people have pushed back on that and said, actually, I want to take more control over my care. But for a long time, it wasn't like that. And it's almost like, the moment the government says they will solve all their problems, people immediately kind of go, I don't have to worry about it anymore. They're going to take care of it. But of course, it's a very dangerous thing to do because all sorts of things happen that aren't necessarily in your best interests. But I've gone off on a tangent. Sorry.
No. Well, the other thing that sort of is that I saw yesterday, and I don't know if it was a recent announcement, but obviously they're now writing off more debt. More NHS debt, and it's almost when you start to sit back and look at it from a different picture, you're almost seeing that they're using this opportunity where the NHS is really hyped up as a brilliant and the people that work in the NHS are doing a fantastic job, but it's almost under that and hidden is the fact that they're writing off more debt, more costs, more equipment. It's when you look at it and you think about things, it's like, wow, okay, we really are. It's almost like the good things is like, it's here, it's massive, but what's going on here? Don't take interest in it. It's here, and it's like, wow, okay.
Yeah, I mean, they've neglected their staff for years. Only a couple of years ago, you had the doctors protesting because they were trying to bring in some contract that they were really unhappy with. And as a dentist, I'd seen that happen as well. In 2010, they wanted to bring in a new contract, and a lot of the dentists were complaining about it, saying, this would never work from the professional perspective. And I remember at the time, the MP who was in charge of that was called Rosie Winterton. And basically she just said, okay, well, you don't want to do it our way, we'll just ship in a load of dentists from Europe and they'll do it instead. And, where do you go from there? When you've got an unequal power balance and you're not listening to the professionals who know what the patients need on the ground. And actually, if they're not operating within the NHS system, it's very, very difficult. I mean, although there are private dental practices around, you really have to be on top of your game to survive as a private practice. And it can be very, very stressful. And a lot of dentists do it because they know that's the only way in which they can fulfill what they went into the profession to achieve, which was to provide the best care for their patients. But they haven't been able to do that in the NHS for years. So they have to do it by being completely outside of the system. But by being completely out of the system, they're disadvantaged in so many other ways. I mean, the NHS is controlled in dentistry because it controls the price that you can charge for certain things, which automatically limits what you're able to deliver. So at least in the private practice, you can charge what you need to charge, but it seems that much bigger because in the NHS, it's not in NHS dentistry anyway. It's not just about what the patients are paying for that item of service, but they're also getting grants from the government for their computer systems. If they need to do that, some of their annual training that, the private practices don't get. So that all has to be funded from the patient fees. And so then the general public say, well, I don't understand why, I can get this service here at this price. And then if I go to a private practice, it's 10 times more. The private dentists clearly must be ripping me off. And that's not to say there aren't any cowboys out there, because there are. But there is a reason why private dentistry is that much more expensive than NHS dentistry. But that's a really difficult conversation to have with someone, especially when you're having it 10 times a day, when everyone comes in on, why are you so expensive? It's just like, I don't have time to explain. No. You want it? This is what it costs.
That's the thing, The overheads aren't supported by, grants and stuff like that. Like
exactly. The only way I pay my costs and I pay my staff and I pay myself is, what I charge you. And if I don't have enough patients, game over. Which is what a lot of them are going through right now.
We've obviously touched on a lot of things, and I don't want to go too controversial.
We could go on for hours.
I know. But I feel like for those listening, that now seems to be the good time to be looking at it further, and hopefully combined with obviously the 2 podcasts we recorded and the book that's on Amazon. I'll plug it again, but it's on the screen.
Oh, thank you.
Truth Decay, How Bitcoin Fixes This, honestly was really opens your eyes, and hopefully people can start to see that and see that it's the right time to be doing something about it. It's not just, I think, just aside to it, but at the moment it seems like it's just, Bitcoin seems to be just for the rebels or the mavericks that want to run with it, but actually it's really not. When you look into it further, well, it shouldn't be.
Yeah.
So, thank you very much for your time.
Not at all. And thank you, Nick. Thank you for asking me. It's really difficult to know where to start, kind of producing my own videos. I think it's a lot more dynamic when you have a conversation with someone else, and, having someone's perspective who's new to it really kind of brings out different aspects of the conversation. So
of course.
Thank you for your interest and for inviting me. It's great. I love talking about these things.
Yeah. No, I'm sure we'll have you on again when... it's maybe after the halving when it fluctuates.
Even more exciting, I know. It's like, I told you 18 months ago. Listen to me.
It, we'll do.
Brilliant. Thanks, Nick. Good to see you.
This is the Entrepreneur Academy. If you have a question, use the hashtag #TheEntrepreneur Academy.